Hello from the Dukascopy TV studio in Geneva. We are back with our weekly technical analysis with Jean-Francois Owczarczak from the Management Joint Trust here in Geneva. Welcome, Jean-Francois, to the studio again.
Hi, Daniel.
So we had a rising euro and a falling dollar last week. So is this development still going on? This is one of the questions for this week.
Well, it is at the moment. The euro is still correcting up. It's holding up nicely. We did want to focus on a slightly longer time horizon today to show that the daily trends were still in place. So here on this FinGraphs mosaic, we have a euro-dollar, cable, dollar Swiss, gold, Swiss franc against dollar, or dollar Swiss, dollar yen, Brent, and the S&P future. And so we'll start with the euro. And here we have an investor's view, so a combination of a weekly chart, a daily chart, and an hourly chart. The weekly chart gives the perspective over the next few quarters with 1 point every week. The daily chart gives the perspective over the next few months, and the hourly chart gives the perspective over the next few weeks. So let's start with the weekly. We'll zoom on it. It's still in a downtrend. We still have a bear. It's been in a downtrend for now, almost 9 months. Started to point to targets below 110, above 130. We've reached those targets. Our target zone still extends a bit further. We have a target zone which gives us a range between 112 and 101. We believe we could actually reach that 101, and that the timing here is about circa another quarter, so pretty much towards mid this year to early this summer. From a risk perspective, our oscillator is now in the oversold zone. It hasn't turned up yet. We believe this is an intermediate bottom situation. We also see stress on our envelopes here, meaning the two envelopes are touching each other, yet the longer term envelope is still heading lower. So typical of an intermediate bounce, so we believe we are in this situation today. Now if we look at the daily has been consolidating over the last month and a half. It is still in a downtrend. It has reached its target, so it's quite an exaggerated situation. But given the weekly, which we have just seen, we believe that this downtrend can continue. We see that the risk index, although it has touched briefly on the oversold zone, is not an exaggeration yet. So following the end of this consolidation up, or sideways if we could call it, we believe there's more a downside over the next few months. On the hourly, we are correcting up, and we have been now for almost 2 weeks. This correction up, there's no signs to indicate that it is over, other than we have reached its targets between 107.78 and 109.20. We would have to envisage a long-standing correction up if we were to make it above 109.20, which would mean that we would ignite impulsive targets up, and the potential there would probably lead us up to 112, 113. But this is not the case at the moment. We only corrective. We pretty much read the objectives. We also don't have signs that it is resuming the downtrend now. So it's pretty much a neutral situation, and a neutral situation with a bearish medium term and a bearish long term does bring us to be defensive on euro dollar up. So it would still be medium term to long term negative on euro dollar and pretty much neutral on the hourly.
So let's have a look on the gold. So to what extent does it reflect the insecurity in the market right now?
Well, the insecurity in the market, given what just happened with earnings in the US and especially the Nasdaq, it has been taken away a bit. We've seen Microsoft, Google, and Amazon post great results. Apple is coming in tonight, so it'll be interesting to see what comes out of it. Some analysts are projecting some pretty outstanding earnings also. All in all, you're still negative over the long term on gold. And it still has some potential in terms of targets and in terms of time. Our target range could extend down to 1,000, but if you take an average here, you probably are looking at levels around 1,100 as a target. In terms of timing, you probably have another 1 or 2 quarters more to go to the downside on gold. So at the moment, still a negative on gold. On the daily, we've had this strong correction up that we've seen late last year up until January. We've now been resuming the downtrend, and as we could see, this movement doesn't seem over yet. We're not quite oversold, or starting to be oversold. targets do extend down to 1146 to 1086, so somewhere low 1100s would be a target. And there's another 3-4 weeks left in this move down, so also not over. And the hourly, which had seen quite a nice correction up, is now back in an impulsive move down. It just made it below its corrective targets to ignite its impulsive targets. So it's a bit early stages to be too negative. But if you look at this move, it could extend down to 1154, down to 1134, so somewhere around 1145. No exaggeration yet, the risk index is pretty much neutral. So a slightly negative stance on the hourly, still negative on the daily, still negative on the hourly. So it's a potential continuous downtrend, as the machine is stating here.
Thank you, Jean-Francois. And you also mentioned that last week's stock markets really ended the week bullish. So what does your FinGraph system say? What are the perspectives for the equities?
We'll look at the S&P 500 because we usually use it on our mosaic here. But the big news last week was NASDAQ. It's actually on all-time highs. It actually went over its high water mark, which was sometime back in 2000. So that's quite some time away. So it's a big event. But we've been leading, so this is an investor's view of the S&P futures. We have been saying for months that we believe this move wasn't over, that the weekly was still projecting impulsive 2 up targets, so quite aggressive targets, but still in an uptrend projecting towards these impulsive 2 targets, somewhere between 2200 and 2400 over the next few quarters. So we believe the move is not finished yet. The risk index is also not in a blatant exaggeration. Now, if we look at the daily, so the perspective over the next month or so, it is also heading up. We had been stating over the last weeks that the RCA, or the risk index, was pretty much neutral in the middle and turning up. We could see that from a price perspective, we've reached the initial stages of the targets, but we could extend up to 2170, so there's a bit more to go. Also, in terms of time, the move doesn't seem over yet. So we believe that markets, the S&P and US markets in general are heading higher. And from the hourly perspective, well, over the next week or so, bit of exaggeration here, but nothing more than a few days of consolidation, I believe. And then we should be moving higher. First step here on the hourly is to move above 2123 and up to 2150 over the next week or so. Still a bit more time left here, so that would confirm this situation.
Thank you very much, Jean-Francois, for this week's analysis.
Thank you, Daniel.
And thanks for your interest. You will also find more interviews on the website of Dukascopy TV. Have a great day and see you next week.